Hi, this is Zach Meir with the weekend edition of the Bulletin Board Heroes. It is Sunday, the 30th of October. Starting off with the FTSE 100, where we're near the top of the range, but not really competing with the Dow, which was up 14% this month, so rather flimsy response or actually performance by the UK blue chip index. So we've got that line of resistance there from last month running around the 7100 level. Need to see that broken on an end of day close basis. Initially up to the 50-day line if we can do that around 7150, and then obviously hoping perhaps in vain for a move up towards 7500 at the top of that 2022 falling trend channel. On the downside, probably the 6880, 6870 area, the support there, not really able to tighten it up more than that. In terms of the RSI, we've broken through RSI 50 and stayed above it, which so far is good, but still wary that we might have a little breakdown even from these levels. Moving on to the stocks, and first one is Aurrigo, which covered in my weekly article. Here we've had a nice little breakout through that initial resistance that the company had around 60 pence, and widening up the chart. The best guess here is that we're in a rising trend channel from back in September, heading towards the £1 area, and that's certainly about while we hold above Friday support in the upper 60s, so 67, 68, the stop loss ahead of a potential move to a pound, and maybe that could be seen by the end of next month. On to Eco Atlantic, which I think I interviewed a few weeks ago. Here we've had a gap through the resistance line there from back in March, and we've held the gap so far. That's around 35.5 pence. That suggests that this could be the time where we have the big breakout, potentially up to around 50 pence, which is the top of a rising trend channel from this time last year. Timing on that a bit difficult, but again, maybe by the end of next month. Only back below the rising 50-day moving average now around 33, cancelling out that potential breakout. But the gap there on Thursday giving us quite a lot of encouragement. Always nice when a stock lasts its initial target, technical target. In the case of ECR Minerals, we were looking for around a penny, which was the top of that July broadening triangle. We already had the unfilled gap to the upside off the lows, which is probably the most reliable of all the signals that you can get in small cap charting. So you start also starting to see the 50-day line rising as well. So this looks like basically the first part of the move, and above a penny, which was the old August resistance, looking for as high as 1.8 pence, maybe by the end of the year, which is the top of a broadening November triangle on the daily chart. So pretty healthy there. If you are cautious, maybe wait for an end-of-day close properly, or another end-of-day close above 1.1 pence, but it looks as though that's the 200-day moving average, but it looks as though the shares have done enough to prove themselves, especially with that unfilled gap to the upside. Onto a stock which has been pretty good even from the start. First Class Metals, nice progression here. Unfilled gaps to the upside and lots of bright candles there. And it looks as though rather than just 17 pence, or 17 or 18 pence, which we were looking for previously, we're only at the midpoint of a rising trend channel from back in August, and we could actually hit 24 pence by the end of the year, which would be quite a result. I think one of the better IPOs around. And that's valid while we hold above 14 pence, which is the area of the price channel floor and also the 50-day moving average. Stock which was intriguing this week, I think there was a cooling RNS. Obviously, these nomads are always very busy on these sorts of things. Mirriad advertising here, we've had a bear trap from below the September support around 4.25 pence. And above that, we're looking for not only a break of the 7.75 area, which is post-September resistance, but potentially up to 15 pence. Obviously, that depends if there's no nasties lurking on the fundamental front. Decent risk reward there in the sense that above the 4 pence area, we're looking for 14 over the next 2 to 3 months. But even if we get up to 7 or 8 pence, I think we'd be quite happy on this situation. Also a bullish divergence line there as well, which also suggests that a rather unlikely turnaround is finally on its way. Second stock to blast the initial target has been MobilityOne. So we were looking for 12p, 13p. We've exceeded that on Friday. This looks like it's heading towards the top of a broadening triangle from back in March, and that is heading towards 18 pence, which should be achieved ideally by the end of November, or perhaps even sooner. But that's a wonderful U-shaped reversal bear trap there. U-shaped bear trap, I think one could call it. Very nice signal, and the shares are made good on that. The situation here is that at least while we're well above the 10p area, 18 seems to be on the cards. On to Renalytix, which had good fundamental news, which again I described in yesterday's article. Here you can see that we've gapped off the low with an unfilled gap to the upside. Three wonderful looking candles there, opening at the low, closing at the high on 3 days in a row, which is a very rare and very strong signal. All we're waiting for now is to break that line of resistance there from August, around 76 pence. If we can do that, well, actually, you can say that we're right on it now, but say we break 76 pence on an end of day close basis, the next target here up could be up to as high as £1.20 on a 1 to 2 month time frame. So that is, I'm not saying it's the chart of the week, but one of the a very good looking chart there. And we've also got, actually, to add to that, bullish divergence. So there's an uptrend line, even though we had those lower lows going into from September, late September, going into October. So all the green signals there on Renalytix at the moment. Another stock which looks like it's up to scratch is Scancell. Here, once again, unfilled gap to the upside. In fact, it's the second unfilled gap to the upside. If you were looking at it, which I wasn't, we did actually have the unfilled gap to the upside back in September, and that was potentially an entry point there around 12.5 or 13 pence. The only thing with that one is we have to wait a bit, but on this situation, another entry point potentially versus 15 or 16 pence, and looking for 23 pence at the top of that rising trend channel from back in February. And then timing on that maybe by the end of the year, perhaps even sooner. Also had those rising RSI traces as well, so that also backs that sort of uptrend line there from back in February. It gives the stock a positive glow on a charting or technical basis, at least. One of the better situations of the year, perhaps not surprising, given the name of the company is Southern Energy. And a rising trend channel here in place since the turn of the year. Obviously, we've come back down quite a long way from the June peak, so that was 90 down to basically 45, but halving almost exactly, which is rather unfair, but symptomatic of the current market conditions. End of week was positive, both above the 50-day moving average and also a gap close buy signal. So we had a gap down there back in September, and we closed well above that for the end of last week. That suggests that at least while we're above the 50-day moving average around 58 pence, we could revisit the best levels of the year, maybe over the next couple of months, and heading up towards not only 90 pence, but even up to a pound. But the risk reward here pretty good in the sense that back below the 55 area in the floor of the channel, one would probably have the stop loss on the idea there. Trackwise is next, and here you can see that after a rather negative year to date, almost a year from hell, we've got a bit of a turnaround, and it looks significant. We've had basically the shares close above the 50-day moving average with a little sort of U-shaped bull flag there as well over the last week, and we actually closed above the top of that bull flag there at 21.2 pence. But at least above the 50-day moving average at 16 pence, we're looking for 45, which is the top of that rising trend channel from back in August. The turnaround there with basically bullish divergence at the start of October, as well as the MACD buy signal, does give the stock probably more reassurance on the upside than maybe the fundamentals have over the course of the year. Don't normally look at Vela, but because it's such a micro cap, or at least a micro share price there, but difficult to resist after the bear trap that we had below the initial October support there, 0.018 pence. So the bear trap there, bouncing off that falling support line there from back in January. That suggests that we could at least head up to the 200-day moving average at 0.03 pence. Best case scenario, this is indeed the turnaround that we've been waiting for, up to 0.4 pence, maybe for sometime early in the new year. We've also got bullish divergence here, so basically the RSI has kept tracking either sideways or up, even though the shares went down. So that gives the technical cue for a potential move to the upside. Finish off with Valereum, as it's always good to give aqua stocks a bit of a mention if one possibly can. Here we've got a situation where the shares have broken out on Thursday. Actually, they broke out of the falling wedge that we were in from basically the April period. The line in question there around the 14 pence level, and even we actually closed above the 50-day moving average on Friday, just around 16 pence. So there's a few pluses there. View now is that above 13 pence, we could head up to at least the post-June resistance around the upper 20s, and maybe as a best case scenario hitting the top of that broadening triangle from back in May as high as 35 pence. The other plus point which I've just noticed is that September support was there around 15 pence, and the close this week above that is a bear trap, so looking rather better for Valereum than we have in many months. That's it from me today. More updates during the week.